Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. A second bullish white soldier yesterday and a follow-on to the previous session's immediate countering bullish opening white Mariboso and bullish engulfing pattern. Prices continue travelling up along the bright green lower tine, currently at 113 even, of the late February to mid-May bullish Andrews picture, which is roughly parallel to the overhead but still influential broken dark blue late February to early May uptrend, currently at 114.85. Now we're in a fairly quiet area right now between the July 23 high that's below at 112.76 and the overhead June 2020 high at 114.22. However, beyond the June 2020 high, we have the bright red neckline extension, currently 114.62, of the important August to September 2020 head and shoulders top. This bright red neckline extension effectively capped the market back in April, along with the January 2020 high at 114.82 and the February 22 high at 114.95. Finally, as I've said previously and repeatedly, we are now set up with just 5 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we'd be on. Anything in between, and we would have a lesser outside year pattern. I am at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one. Now, so far today, a reactionary move back down, approaching the bright green lower tine. Cable, aka sterling against the US dollar. A bullish opening white Mariboso yesterday, as well as a second bullish white soldier. It was the highest open, close, high and low since February 2022. The market continues to ease through quite well and easily, it seems, through the congestion between 134.83 to 136.43, above quite a lot of it now. Overhead, we still have the February 22 high at 136.43, and then a fairly free area until the January 22 high at 137.48. Further down, we have the interesting purple neckline extension, currently 134.13, of the small but influential mid-November to early December 2024 reverse head and shoulders continuation pattern. Okay, so I have repeatedly asked you to keep an eye on this September 24 high at 130.44, 34.34. The reason being now that the prices have exceeded that level, we are set up for this market to make that rarest of patterns a possible annual key reversal. This pattern has already been set up on Eurodollar. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we'd be on. Anything in between would have a lesser outside year pattern. I am at this stage not even going to contemplate what the result at the end of the year will be, just that we are now set up to achieve one. Now, so far today, an attempt higher, but we've had a rebuff lower, though still within yesterday's range. US dollar against the Japanese yen. A reactionary attempted bullish thrusting pattern yesterday after the previous session's bearish black Mariboso. The market seemed to try lower, but then balk at testing the August 24 low below at 141.66 and turn higher, yet still get capped by the breached lower trend line, currently at 143.18 of the late April to mid-May ascending expanding wedge pattern. Overall, we are still well within the big picture bearish item, which is the bright red July 24 to January 25 bearish Andrews picture with the bright red upper tine above, currently at 145.85, and the middle tine well below, currently at 130.55. This picture, though at one point breached and since repaired, has shown and continues to show the bearish angle attack of this market. Additionally, the other pattern I'd previously pointed out, which is the whole February to date action, even the whole mid-January to date action of a descending expanding wedge pattern, well, that is still there, the bright red upper tine making up the upper trend line, and the pink lower trend line, which is currently at 134.97, of the well highlighted early February to late March descending wedge pattern making up the lower trend line. For this pattern, I had laid out some, or have laid out some targets below just in case. We have a primary nearby target X at 141.95, a harder to reach secondary target X1 down at 138.35, and a tertiary, much harder to achieve target X2 down at 136.45. Now, so far today, a dip lower to make a new low for May, but also a reaction move back up away from the August 24 low, back up within the ascending expanding wedge pattern and towards the overhead 50% Fibonacci line of the January 23 to July 24 move at 144.58. This move today has already set up the conditions for today to be a daily key reversal up. Thus, if we close either over 142.84 or under 142.54, then we'd be on. Anything in between and would have the lesser outside day pattern. Right now we are looking at an interesting daily key reversal up. US dollar against the CNH, the offshore Chinese yuan. An indecisive spinning top yesterday, but it could also be seen as a bullish harami. Interestingly, it was the second consecutive close below the bright red lower trendline extension, currently 718.41, of the late January to late April descending wedge pattern, as well as below the dark blue neckline extension, currently 719.76, of the late August to early November 24 reverse head and shoulders pattern, as well as having overhead the May 24 high at 719.64 and the 50% Fibonacci line of the September 22 to April 25 move at 719.91. Now looking below, we have a little until basically the Fibonacci congestion in the 714.48 to 714.95 zone. Now so far today, a follow-on higher to yesterday's action, moving up over the bright red neckline extension, but balking at testing the overhead dark blue neckline extension, plus the May 2020 high and the 50% Fibonacci line at 719.91. US dollar against the Brazilian real. A fourth countering bullish harami yesterday, if only just after the previous session's third countering bearish dark cloud cover pattern and bearish double. This continues to come at a crucial time as the market had earlier thrice pierced the key 560 even level, as well as the shallow bright red lower time, currently at 564.35, of the mid-August 24 to early April 25 bullish shift pitchfork. However, we still have the recently finessed purple May 24 today uptrend below, currently at 559.82, though I need to reiterate that I don't think these, apart from the 560 level, I don't think these may be that good as supports, and it wouldn't surprise me to see them being tested again and soon. Add to all this, we have mixing with the market the once significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07. Finally, please bear in mind that we have a monthly key reversal down here for April, and all things fall within the shadow of this pattern. US dollar against the Mexican peso. A lower but still indecisive spinning top pattern yesterday after the previous session's bearish closing black Maribosa. It was nevertheless the lowest low since early October last year. The market continues to make its way lower after a hiatus over late April to early May, exiting the support that is now resistance between 1940.68 to 1936.27, and now testing the next support zone below between 1915.03 to 1920.38, and that's made up from the 50% Fibonacci line of November 20 to April 24 move and the March 2020 low respectively. This is all still an overall follow-on lower from the overhead very wide congestion band that eventually became a rectangle top pattern and is centered on the September 22 high at 2057.65, stretching roughly between 2017.20 up to around the 2083 even area. It's also worth bearing in mind that April became a monthly key reversal down. Now, so far today, a small reactionary move back up, which, though it is above yesterday's range, is still well within last Friday's range.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.